Okay, yeah, like I said, this is being recorded, so if you don't, if you miss something, just go watch the recording. Um, Please follow me on the charts so you can see what I'm looking at and what what I'm talking about on the charts. So we are doing trends today and how to spot a trend because we still have some issues regarding when is it a trend, when is it not a trend, and just remember that a trend can be spotted through indicators or price action. I prefer price action. It's a bit faster for me, a bit more accurate, but some people use moving averages as well. So you can use a 50 period moving average on a 4 hour or daily or an hour to see where the trend is going. But what I'm going to do is just show you how to do it on price action, and it's just following your ABC movements and just kind of knowing if the price is moving sideways, up or down. Um, so let's just start on the Euro US dollar. If you go to your Euro US dollar chart, you can see we are in an uptrend on the 1 hour chart. If you go into the 1 hour chart, because on the yes, where did this uptrend start? Okay, the uptrend started on the 13th of March. If you guys see on the 13th of March, we had a low, and then only our next low was on the 17th of March. But that low was higher than our previous low, so it's a higher low. And that will indicate that immediately, as soon as that low was formed and price moved up and your zigzag indicator made that low, that shows us we are in an uptrend. Then from that low on the 17th of March, we again had a high, and then on the 18th of March we had a low again. But that low was still lower than our low we had on the 17th of March. So we are still in an uptrend. Then we had a high again on the 18th of March and then again a low on the 19th of March. But that low again was higher than our previous low on the 18th of March. So we are still in an uptrend. Then we had a high again on Friday night on the 20th of March. And then we had a low on the 23rd of March. But that low again was higher than the previous low on the 19th of March, showing we are still in an uptrend. Then we had another high and another low, still higher than the previous low, and now we are in today. Today we had a new high and a possible low, but that low, that with the possible low we have right now with price at this point in time, it is still higher than our previous low. Now let's say if price still goes down, and it does go down lower than the low on the 24th, which was level 1.0889, only if price breaks that level, then trend has changed and we will be on a downtrend on the 1 hour chart on Euro US dollar. So that is basically the simplest way of looking at it. Just every time your low is higher than your previous low, trend is up. Every time, and if you were looking for a downtrend, every time your high is uptrend, every time your high is higher than your previous high, it's an uptrend. Let's quickly go to a chart where we can see an uptrend. Downtrend. Sorry, let's just look. What has been going down? Okay, let's go to the Great British Pound, Australian dollar. The trade we entered also this morning is on that pair. Now, if you look at 1 hour, Great British Pound, Australian dollar, and you move back a bit. No problem, Fricky. You can just watch it online. Let's actually move back all the way to the 17th of March. Now, on the 17th of March, we had a high and we had a low. But that low was lower than our previous low on the 16th of March, signaling trend has changed. The next high on the 18th of March is lower than our high on the 17th of March, confirming we are now, in fact, in a downtrend. But then our next high on the 19th of March is higher than our high on the 18th of March. So that will show that we are heading for an uptrend again. Then our low was higher, our next low on the 20th of March was higher than our previous low on the 18th of March, now showing again signaling for an uptrend. But then our high, all of a sudden our high did not break. So now we are not in an uptrend anymore. That our high that is not higher on than the previous high on the 19th of March is now showing downtrend again. Then we had a downtrend all the way down to the 14th of March. And then we had a high on the 26th of March that is not higher than our previous high, signaling our downtrend is still continuing. Hence, we did a sell order on this pair. And that is how we can spot our trends. Let's just look for something else. Now, why we mostly use trends on 4 hour and daily is, it's much more accurate. You'll see on a 1 hour chart trend changes weekly. But on 4 hours and daily chart, trend doesn't change as often, and that is what we want. If we go over to let's start using our 4 hours. So if we take our 4 hour chart on US dollar JPY, so if you move over to US dollar JPY, you can zoom out just once and then move a bit back. You can see, let's just take it from the 17th. Wait, no, let's take it from the 2nd of February, the week of the 2nd and 4th and 5th of February. Now that week we had a low. Our high was in the following week on the 10th, 12th of Feb. That high was higher than our previous highs, telling us uptrend. Then we had a low. That low is higher than our previous low. So that confirmed our uptrend. But now we are getting another high. But that high is not higher than our previous high. Now that high, our previous high, our next high is not higher than our previous high. But now you must look at it. But our low is still higher. That is still an uptrend. Remember, your high and your low has to change direction. So the high on the week of the 16th and 18th and 19th of Feb, the high there is not higher than the previous high, but the low is still higher. So the low is still higher than the previous low we got. So that is still an uptrend. Only the high didn't break, but the low did. The low stayed higher. Our next high in the following week is the 24th, 25th, 26th. That week now broke higher than the previous high. The low is still higher than the previous low. Then again the next week the high is higher than the previous high, and the low is higher than the previous high. Still an uptrend, all the way to the week of the 9th, 10th, 11th, 12th of March, 13th of March. Now this week we had a high. Again, still higher, so it's still an uptrend. So we were still looking for buys all the time until it broke the previous low. When it broke the previous low, I think it broke the previous low on the 18th of March. All of a sudden now we had a downtrend because our low is lower than our previous low. So now on the 18th of March, this is when we started looking for sell trades. And then obviously if we get a new high, that high must be then lower again than the previous high, and that will signal a downtrend. Does everyone kind of understand what it's about? If it's an uptrend, your low has to be higher than your previous low. If it's a downtrend, your low has to be lower than your previous low. That is basically what you can look at. Uptrend, low higher than previous low. Downtrend, low lower than previous low. So you're just looking for it. It has to look like stairs. You are looking for stairs going up or stairs going down, following the lows up, following the lows down. That is kind of what you're looking at. If you can imagine stairs on your chart, that is what you're looking for. You're looking for lower lows and higher lows. Higher lows will be an uptrend, lower lows will be a downtrend. That is what I use to look at my trends. But then some people also like to add an indicator. So I will quickly I'll just add it to my US dollar Canadian dollar chart. US dollar Canadian dollar, and I'll add a moving average. I'll make it 50 periods on a 1 hour chart. Now with the moving average, you just have to look at where the moving average is going. If prices are below the moving average majority of the time, it's a downtrend. If prices above the moving average majority of the time, then it's a uptrend. That is basically it for moving averages. You just kind of have to see that it's going from the bottom of your chart to the top of your chart, or from your top of your chart to the bottom of your chart, and prices majority of the time above it, or prices majority of the time below it. If price is just zigzagging over it in the middle, then you don't have a trend. No one can teach you how to trade the last third of a move. There's also famous quotes about it, and that is just when the trend is changing. That's why we only win 50-60% of the time, but we make a lot more profit when we win. Is because the trend is always changing on smaller charts, and you can't always be right, but if you follow the trend, majority of the time when you are right, you will make much bigger profit. Now that is also how we base our trades on. I just want to look. Is there anything else someone would like to know about trends? Is there any questions? Okay, I will then wrap it up and just inbox me if you're still confused or need to know anything else. But just remember, the final thoughts is you want to see stairs. On your zigzag indicator, you want to see stairs. You want to see price action going lower lows for a downtrend and higher lows for an uptrend. As soon as you see something that looks like stairs, and you just need 2 steps, you just need one higher low or one, you just need one of them, and then you confirm trend has changed, and then you trade accordingly. Start buying, start selling. Thank you for joining me, guys. If you missed anything, please watch it online, and also chat to me anytime you want. Thanks.